Hi guys, this is Abby from Forex Excel. Today I'll be discussing on how to refine your order block. So let's get started. So in refining an order block, one way to see it is in the lower time frame. So find OB is you will see it in the lower time frame. Okay. So
What's up, guys? Today you will learn the difference between retail and smart money trading. I honestly started using retail trading strategy, and I believe most of you as well. So, trading in retail strategy is using support and resistance, breakouts, and retest. So, let's get started. So, in retail trading, the basic fundamentals is all made by support and resistance, more test levels that are stronger or more of a complement, breakout entries, and break and retest. So in support and resistance, um, basically retail traders buy at support and sell at resistance level. So if this is the resistance level and this is the support level, um, price make or price moves like this. Retail traders are tend to tend to buy when the price is here because there's a lot of tests on this level. So they believe that it is more of a confluence or strong level of um confirmation to to have a buy entry. So they believe that once they enter here, price will go up like that. Or if the resistance is have this test levels, they believe that price will go to the downside and continue to go to the downside. But in reality, it's not that in that way because the more stronger confirmation, the level of the level of support like 4 to 5 times, that means that this level is so strong because it is tested. But as institutional traders, it does not what it means. And this type of strategy is less likely that it won't work anymore. So example of the breakout entries is like this one. Like price is making a consolidation and then price had this breakout. And then retail traders believe that this level this level of resistance have a strong confirmation here that when the price breaks at this level, price will go here at this resistance level and then goes up again. While we know on our previous videos that there's a lot of liquidity above this level and below this level, that price could um go first here and then make another move to the upside or to the downside level. So that's how retail trading works or how they trade the markets. So let's go to smart money trading. So the basic of smart money trading is supply and demand. And it's more stronger when it is not mitigated. So there's a zone that we're looking that there's a significant move to the downside or to the upside when supply and demand is basically we wanted to find that area where the market had the big push or had had the push to the downside with a lot of momentum, a lot of engulfing candles and a lot of buy or sell side pressure. So we expect the price to come back on that level and test it before entering. So for example, in Euro USD, since we are seeing a downtrend, um this move right here have this um push to the downside that breaks all this previous low. So as smart money traders, this this is the supply for us, where we wanted to see, or this is the supply that is not tested yet. So we wanted to see the price to go here and then target the level on this one, because there's liquidity here on this side. So as you can see here, the price came back on the supply zone on this untested area, and then now it's already mitigated, and once it has the price in there, it has this momentum to go to the upside, to go to the downside and reach this level where the smart money or the retail traders have their stop losses or sell stops, because it's form as for smart money traders, it forms for us as equal low liquidity. So there's a lot of stop losses here that's retail traders have. So in retail stop loss, in smart money, we're getting in when retail traders are going to stop up. We're not going to enter at support or resistance level, because 95% of the market is consolidation, and it always create a tons of level of support and resistance. So as smart money traders, we will wait for the price to break or go below above on that supply or support and resistance level. So retailers use candle patterns like engulfing, doji, hammer stick. So in smart money, we only use one candlestick pattern, which is the institutional candle. So like what we've shown here, this one, this is the candle that happened to be the last app candle before or before this break. So actually this could help us to see the footprints of the bank where buying and selling is um is going. Last concept for smart money is the imbalances. So imbalances also help us to know where the bank's going to take the price in the next few months or years. So we just like here in the chart, we noticed that um this move, like this impulsive move to the upside, is an example of imbalances. So as a smart money trader, we always took this or we always look this opportunity to trade this imbalance. So as you can see here, after the move to the upside, it created this demand here, and as you can see, price goes back on that one and then make another impulsive move to the upside. So I want to show or share with you guys the funded accelerated program is back. So you can book a free 30-minute call to see if the program is for you. So as of the moment, we accept 3 people per month and focus on getting them funded and also assist them after getting funded. So you can go to forexxl.org to check the program, and we'll see you then. I hope this one is easy to follow. See you guys on the next video. Take care.